of 2023. And that should be question number 5. Should be question number 5. Yes, I hope you are there. So if you have the question with you, please confirm. Please confirm. If you have the question with you, please confirm. Okay. So what are we told in this question here? So we are told the foreign trade balance related to be delimited as at 31st of December 2022. So we are given property at costs, and we are told included within that property is a building whose cost is 400,000. We have the plant at cost, motor vehicle at cost, office equipment at cost. We have accumulated depreciation for building, plant, motor vehicle, office equipment. Then we have inventory on 1st January 2022, purchases at cost, distribution cost, administrative expenses, revenue, trade receivables and trade payables, bank balance, deferred tax, current tax, and the bank interest. Then we have the ordinary share capital share premium, retained profit on 1st January 2022, interim dividends which were paid, and then we have the suspense account. Then we have some additional information number 1 all the way to note number 6. And then what are we required to do? We are required to prepare the foreign financial statement presented in a suitable format for publication. Number 1, we are required to prepare the statement of profit or loss for the year which ended 31st of December 2022. Roman 2, statement of changes in equity for the year which ended 31st of December 2022. And Roman part C, we are required to prepare the. We are told this amount has to be written off. That amount has to be written off. So the working 3 here will be the trade receivables. The trade receivables which are to be written off. So the trade receivables to be written off basically is an amount of 12 million. So we are told 7 million of these related to the current year. And basically this one will be treated as an expense, will be recognized as an expense within the current year. Remember, what we said is that when preparing a statement of profit or loss for publication purpose, we classify the expenses into 5. Now, this particular amount which was written off, we have to determine it will be classified as part of which expenses. Is it part of the cost of sales? Is it part of the distribution, admin, finance, or other expenses? Now, because this particular amount has been written off as a result of a decision made by the management of the company, this one we include it within the administrative expenses. It is an amount which has been written off as a result of administrative decision, as a result of decision made by the management. So this one will be added within the administrative expenses. And then the other amount, which is 5,000, which relate to the previous year, this one will be adjusted in the retained earnings, when preparing the statement of changes in equity. Statement of changes in what? In equity. If you can be able to recall in our previous class, I gave you the format for preparing this statement of changes in equity. We said any prior year adjustment. These are adjustments which were supposed to be done in the previous year, but they were not done. They should be adjusted to the retained earnings at the start. Because this was this amount of 5 million was supposed to be recognized or was supposed to be accounted for by the company as an expense in the previous year, but it was not accounted for. So this one we will deduct it from the retained earnings of the company at the start. This one we treat it as an administrative expense, and then the full amount, this one of 12, this one automatically will be deducted from the trade receivables. The trade receivables of the company will be reduced with what? Will be reduced with the 12 million. So that is the adjustment which is required for that amount. So let's move to the other note. Let's move to the other note. We move to the other note, we see what we are told. Note number 4. Note number 4 is all about IAS 12, income taxes. And we are told the existing debit balance on the current tax in the trial balance represent other stroke over provision for previous year's tax. Can we first of all go back to the trial balance? In the trial balance, I can see we have something called the current tax. Can you see the current tax? And actually, we are told that that current tax is a debit balance. So how much is the current tax in the trial balance? The current tax in the trial balance is how much? Current tax in the trial balance. Current tax in the trial balance, can you see that? Current tax in the trial balance. Yes, so I'm told that current tax in the trial balance is an amount of 2,600. 2,600. Now, take into account this amount in the trial balance, it appears on the debit column. What is this? Is it over or under provision? What is this? Based on our previous discussion, is it under or over provision of tax? Over or under? I'm told by Zipporah it is under, by Lucia it is under. Yes, automatically this one is under provision. Is under provision. We said if that amount appear on the debit column of the trial balance, it is under provision. If it is appearing on the credit side, we say this what is over provision. We say tax under provision in the previous year should be brought to the current financial year and should be added to the current year's estimated tax liability. So in the other sentence of note number 4, we are told a provision for current tax for the year which ended 31st of December 2022 over 52 million is required together with a decrease in deferred tax provision of 3 million. So basically what we need to do here is, first of all, we compute the amount of current tax, which will be taken to the income statement. And we say to compute this one, we take the estimated tax liability for the current year, which you're told is 52 million. 52 million. And then we adjust this with the over or under provision of current tax from the previous year. Remember, in the previous year, there was under provision, which we should add to this. So to this, we should add what? 26. And basically now that will give us what? That will give us a total amount of 54,600. So this is basically what we will recognize in the income statement or in the statement of profit or loss as the current tax. Still in the same point, we are told there was a decrease in deferred tax provision. There was a decrease in the deferred tax provision of 3 million. So how do we account for this? A decrease in deferred tax. How do we account for this? Who can be able to recall? Because what we said is that during the current year, what we account for in the income statement as far as the deferred tax is concerned is the increase or the decrease in deferred tax liability. So we are told there is a decrease in the deferred tax liability. So we say this one should be accounted for as what? In the income statement. Who can be able to recall? Zipporah, we said this one should be recognized as what? In the income statement. Remember the other question which we did, we had an increase in deferred tax liability. We accounted for that as a deferred tax. Actually, we had a decrease. I can remember. We had a decrease and we accounted for that as a deferred tax income. So the same case, because there's a decrease in deferred tax liability, this one in the income statement, will be recognized there as a deferred tax income. So we are done with that. Let's move to the other point. Number 5, we are told the inventory count as at 31st of December 2022 revealed the value of the inventory at cost was 85 million. So this is the closing inventory, no working which is required. In note number 6, we are told on 30th of December 2022, the company directors invited the current shareholders to subscribe for a right issue on the basis of 1 share for every 5 shares which were held at an exercise price of 15. So this is information about the right issue. And then you're told the CAM right price. The CAM right price is the market price per share before the right issue. The CAM right price on the last day of trading was shillings 20. And then you're told the proceeds from the fully subscribed right issue was credited in the suspense account. So Basically, in that case, we are told there was a right issue. And I hope you can be able to recall we said a right issue. This is the issue of additional shares to the existing shareholders of the company at a price below the market price. So what we need to do here is we compute how many shares were issued by the company during the right issue. And as per note number 6, we are told during this particular right issue, the company was to issue 1 share for every 5 shares which were held. So the company was to issue 1 share for every 5 shares which were held. So what we need to do is to determine how many shares were held before the right issue. So we take the ordinary share capital of the company. The ordinary share capital that should be around the 4th item or the 5th item from the bottom of the trial balance, which is 200,000. We want to know the shares which had been issued by the company before the right issue. We take the ordinary share capital. For us to be able to determine the shares, we divide that with the par value per share. The par value per share in that case is 10. So this will give us 20,000 shares. So these are the shares which were held before the right issue. So we need to determine how many shares were issued during the right issue, because the company was to issue 1 share for every 5 shares which were held. The shares which were held were 20,000. So we cross multiply, then we divide. So we have 1 times 20,000 divided that with 5. So this will give us the shares which were issued by the company during the right issue. So, and this will give us, is it 4,000 shares? 4,000 shares, is that what you're getting? 4,000 shares. Please confirm whether you're getting that figure. Is that what you're getting? 4,000 shares? Yes, 4,000 shares. And as per note number 6, these shares we are told they were issued at a price of what? They were issued at a price of 15. Remember, during the right issue, the shares are always issued at a price below the market price. So the amount which was raised from the right issue was 4,000 times this, which was 60,000. And we are told in note number 6, this amount was credited in the suspense. You see, anytime the company has issued share, the amount which is received, that amount is always debited in the bank account. This amount is debited in the bank account, and basically should be credited in the ordinary share capital. Part of it should be credited in the share premium. I'll be able to explain what we credit here, what we credit here. A total amount of what? Of 60. But instead of the company crediting this to account, the company credited the suspense account. And that's why in the trial balance, the last item, I hope you can see a suspense account, and the amount credited there was 60. So that this amount of 60 was credited here instead of being credited in the share capital and the share what? Premium. So we need to do the correct accounting entry, or to effect the correct accounting entry. And this amount of 60,000, we are saying it was supposed to be credited in 2 accounts: ordinary share capital and the share premium. Now, the amount which we credit in this account is always based on the par value per share. So we take the shares which were issued, which were 4,000, and then we know the shares were issued at 15. The amount which we credit in this account is always based on this amount here, the par value, not the issue price, but the par value, the amount which we have in the trial balance, the par value of 10. So the amount which is credited in the share capital is always based on the par. So therefore, the amount which was supposed to be credited in that account is 40,000. The amount which was supposed to be credited in this account, or the amount you are going to credit in this account, is equal to the shares which were issued times the amount of the share premium. The amount of the share premium is basically the amount which is above this 10 shillings. Remember, the shares were issued at a price of 15. How much is the amount is above 10? The amount above 10 is 5. So that one is a share premium. So an amount of how much? An amount of 20. So therefore, in preparing our statement of changes in equity, this will be added to the share capital. This one will be added to the share what? To the share premium. And basically in our case, I think we are done. So what we need to do now is basically we proceed and prepare what is required. So we start with part A. So we have the title. The name of the company is BD Limited, and this is the statement of profit or loss. Statement of profit or loss, which is for the year, which ended 31st of December 2022. 31st of December 2022. 31st of December 2022. So here we need to have just a single column like that. We just need to have a single column. So have this so that we move together. Yes, so I want us we prepare this together. I hope you already have the title with you. I hope you already have the title with you. And what do we start with here? Who can be able to remind us? Zipporah, what do we start with here? In preparing the statement of profit or loss, we start with what? We start with what? We start with the revenue. We start with the revenue. So the revenue, that one is always given in the trial balance. That one is given within the trial balance, So revenue, how much is the revenue? You have to recall, the revenue will have to be adjusted because this amount which was received from the sale of the asset was included within the revenue. So once the company sell an asset, that is not considered as part of the sales. So the revenue I'm told here is an amount of how much? Is an amount of 1123,500. 1123,500. So to this we less this amount of 20,000, which was included within the revenue. And this will give us an amount of how much? This will give us 11,03,500. 11,03,500. Is that what you're getting? Is that what you're getting? If yes, please confirm. Please confirm. Are you getting that? Yes. So having that, we need to move and we compute the cost of sales. You have to recall, how do we compute the cost of sales? Cost of sales, this one is equal to opening inventory plus purchases minus closing inventory plus depreciations plus the loss on disposal. Because in our case, we are not given the cost of our sales. We have to compute that. So this cost of sales, we go back to the trial balance, and below the accumulated depreciations, we have the opening inventory. So the opening inventory is an amount of 138,000. To that we add purchases. Purchases is below that opening inventory, which is an amount of 667,000. 667,000. And then to that we less the closing inventory. I hope you can remember closing inventory is in note number 5. Note number 5. So we less 85,000. We less 85,000. And then to this we add various depreciations. So from these depreciations which are computed in working 2, some depreciation should be included as part of the cost of sales. One of it is this depreciation on plant, which is 14,500. Do we have any other? This is part of admin, this is part of distribution, this is part of admin. Yes. So no any other depreciation. And then finally, we add the loss on disposal. I hope you can remember, here we have a loss on disposal, which we said will be included as part of the cost of sales, this one. So we add 38,40. So that is how we compute the cost of sales, which we take to the last column, So this will give us what? 138,000 plus 67,000 minus 85,000 plus 14,500 plus 3840. And I'm getting a figure of what here? I'm getting a figure of 738, 340. 340. Is that what you're getting? Are you getting that? If yes, please confirm. Yes, so that is confirmed by 𝐻𝐶. Are you getting the same? Are you getting the same? Helen, Rusia, Raphael, are you getting the same? So if you're getting the same, we need to move and we compute the gross profit. The gross profit. The gross profit should be the difference between those two values. Give me the gross profit. How much is the gross profit? The gross profit I'm getting 365. 160. 365, 160. So to this, then we proceed. Please confirm whether you're getting those figures. Are you getting those figures? Are you getting those figures? Yes. So then to this, we proceed, we add other incomes. Remember, we say that when checking for the other incomes within the trial balance, we check the items appearing on the credit side. So in the trial balance on the credit side, which incomes do we have? So I think on the credit side, I can see accumulated depreciations. Those are not incomes. Down there, I can see revenue, trade payables, bank balance, deferred tax, and the bank balance. And then on the other side, I can see share capital, share premium, retained profit, and suspense. So in that case, we don't have any other income. We don't have any other income. So to this, then we proceed. And we less now the expenses. Maybe first of all, you can get the total incomes. 365, 160. So we less the expenses. Remember, this is our total incomes. So for the expenses, we can start with the distribution cost. The distribution cost. The distribution cost, we take the amount given in the trial balance. And the distribution cost is given below the purchases. I hope you can see that. Which is an amount of 44,000. That is the distribution cost, which is given within the trial balance. Given within the trial balance. Given within the trial balance. And I hope my video is clear from your side. Or is it fluctuating? I can see some information on my screen that my internet may not be stable. Helen, Raphael, 𝐻𝐶, is my video clear from your side? Is my video clear from your side? Okay, so if it is clear, then let's continue. So now to this distribution, we need to add certain depreciations. So like this depreciation on motor vehicle will be included here. Will be included there. Then this one is admin, this one is admin. Okay, so we get the final figure, which is 58,000. 58,000. Then from there, we proceed and we take into account the administrative expenses. So the administrative expenses, we take the amount given in the trial balance, which is below distribution cost, and that is that 93,500. So to this, we first of all include this depreciation on buildings, 10,000. The depreciation on office equipment, 5,000. 5,000. And then there is something else to be included here, and that is this amount of 7,000, the trade receivables which were written off. So we also add 7,000. 7,000. I don't think we have any other adjustments. So then we get the final figure. We get the final figure. We get the final figure. So we have 93,500 plus 10,000 plus 12,000. Plus 12,000. I'm getting a figure of 115,500. 115,500. 115,500. 115,500. Is that what you're getting? 115,500. Yes, that is confirmed by 𝐻𝐶. That is confirmed by 𝐻𝐶 there. So then from there, we need to record the other expense, which is basically the finance cost. Now, for the finance costs here, I think what we have is the bank interest. Just like the other question which we did, we have the bank interest. And that bank interest, we said we consider it here as part of the finance cost. And that is an amount of 2,400. 2,400. Then from there, we will proceed and we check whether we have any other expense. We check whether we have any other expense which is not included within the cost of sales within distribution, admin, or finance cost. Maybe we can check that from the trial balance. Remember, you said all expenses in the trial balance, they have a debit balance. So let's check the items in the trial balance or appearing on the debit column. So up there, we have property, plant, motor vehicle, office equipment. All those are assets. Down there, I can see we have inventory, purchases, distribution, admin. We have dealt with those. Down there, I can see we have receivables, current tax, bank interest, and then interim dividends. So basically, none of those are expenses. And then from the workings which we have done here, we have dealt with this. We have dealt with all these depreciations. We have dealt with this. This income tax will be adjusted to the profit before tax. These are a right issue. It basically means that in our case, we don't have any other expense. We don't have any other expense. So what we need to do now is we get the profit before tax. We get the profit before tax, basically by checking the total incomes minus those three expenses. Minus those three expenses. So 365,160 minus 58,000 minus 115, 500. Minus 2,400. Yes, what are you getting here? What are you getting here? I'm given a 62 to 60 by Lucia. Lucia, is that correct? 189 to 60. 189 to 60. 189 to 60. That is the same amount I'm getting there. Lucia, please confirm your figure. Yes, now to this we proceed and we make adjustment for income tax expense. Income tax expense. Now remember, you say that this income tax expense, this one basically comprises of two values or two components of taxes. Two components of taxes. It comprises of the current tax, which we computed here, and the deferred tax. So let's first of all, we consider this one. the current tax, and the current tax is this amount which we computed here, this one, which is 50,4,600. And then also this one comprises of the deferred tax. And what we have here is the deferred tax income. So the deferred tax income, that one should be added here. And it's basically an amount of 3,000. So because it's an income, we add it to our profit. We add it to the profit here, and basically we get the profit for the year. The profit for the year, or basically the profit after tax. The profit for the year or the profit after tax. Yes, so that will be how much? Minus 54,600 plus 3,000. Plus 3,000. That is coming to 137,660. 660. That is what I'm getting, yes. So then to this, we said we proceed and we add the other comprehensive incomes. Other comprehensive incomes. These other comprehensive incomes include the gain or loss, the revaluation gain or loss on things like PP. If you check on this question here, we don't have any revaluation gain or loss on what? PP. So meaning that the total comprehensive incomes, The total comprehensive incomes remain 137, 660. It remains 137, 660. So that's what was required in part A of that question, and the marks which were allocated there were 6. So these are basically the items which will give you those 6 marks. So that and that, the expenses, our 3 expenses, basically the tax like that. So let's move to part B, and we are required to prepare the statement of changes in equity. The statement of changes in equity. So remember, a statement of changes in equity, this one is prepared basically to show the changes in the various items of equity. And therefore, we said in preparing this statement of changes in equity, we always start with the details column. And then we need to go back to the trial balance which are given. We see which items of equity was this company having in this year. So we have various items of equity. Actually, we said equity comprises of share capital and reserves. So the first item of equity, I can see ordinary share capital. Below ordinary share capital, I can see share premium. Maybe you can just write that in full. And then from there, we have the retained profit. The retained profit. Do you have any other component of equity? Any other component of equity? I don't think so. And then finally, we have the total column. It's also important for us to indicate here that our figures will be in thousands of shillings. So what do we start with here? We always start with the opening balances. We start with the balances brought down. The balances brought down, these are the balances we have in the trial balance. 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 Someone is saying my Modimus board is not clear. Is my board clear? So please confirm that as we continue. So we record the opening balances. So for the share capital, this is 200,000. Share premium is 50,000. Retained earnings is 223. 640. 640. Yes. I think the internet, I think it is fluctuating. I don't know what is happening, but I don't think it is that bad. So let's get the totals. We have 250 plus 223, 640. 640, which will give us 473, 640. 473, 640. Then what do we need to do? We need to record the various items or the various transactions which occurred during the current year, and basically which affect these items of equity. Maybe you can start with what? Let's start with what we have here. This statement of profit or loss which are prepared. We said what we bring here is the profit after tax. The profit after tax, this one, or the profit for the year. And actually that one should be taken to this column, the retained profit or the retained earnings column. And then we take it to the last column, 137, 660. Then from there, we have this right issue. And basically the right issue, we have said it will affect 2 items. We're going to add 40,000 to the ordinary share capital, 40,000, and then to the share premium, we add 20 there. The total amount is 60. We take it to the last column there. Okay, so then from there, this will not affect that. we have this particular amount here of 5,000, which we said will be deducted from the retained earnings at the start. And actually this one, we refer to it as the prior year adjustment. The prior year adjustment. This was an item which was supposed to be adjusted in the financial statement for the previous year, but it was not adjusted. So this one will be deducted from this, because this was supposed to be, or this 5,000 was supposed to be recognized as an expense in the previous year, but it was not accounted for. So the profit of the previous year was overstated. So that's why we are deducting that from the retained profit from the previous year. Sasa? Yes. So we refer to it as the prior year adjustment. So let's check whether we have any other adjustment we need to capture there. This one will not affect that. The same case with this, but if we go back to the trial balance, I think there is somewhere I saw interim dividends. Yes, we have interim dividends. The second item from the bottom of the trial balance, we have interim dividends. Interim dividends. Interim dividends, we said dividends are always paid from the profit. So we left those dividends here, which is an amount of 10,000, and we take it to the last column. We take it to the last column. So I don't think we have anything else. I don't think we have anything else. So let's get now the balances at the end of the year, which then we transfer to our statement of financial position. So ordinary share capital, this will be 240,000. 240, this one will be 70,000. So we need to get the closing balance in the retained earnings or the retained profit, 223,640 plus 137, 660 minus 15,000. So what are you getting here? I'm getting 346,300. So then we need to get, is that what you're getting? Yes, that is confirmed. So let's get the total in the last column. The total in the last column, you may decide to add this plus this plus this, or you work out that downward. You should get the same value. You should get the same value. I'm getting 656,300. 656,300. Okay, yes. So that is it. That what was required in that question, and equally the marks are located there were for those. These are basically the items which are marked: the opening balances, profit after tax, the right issue, interim dividend, and the prior year adjustment. Remember, the totals are not marked here. These totals are not marked. The same case with those totals. So we go to part C, where we are required to prepare the statement of financial position, a statement of financial position, statement of financial position. So here we start by recording the non-current assets. We start by recording the non-current assets, non-current assets. So for the non-current asset, remember, we always start by recording the tangible non-current asset. Tangible non-current asset in our question here, we basically have a number of them, including property, plant, motor vehicle, office equipment. But in this case, if you can be able to recall, we said when preparing a statement of financial position for publication purpose, we don't record those particular assets yet separately. So instead, compute the total net book value and basically include them here under the name of the property, plant, and equipment. So that's basically what we need to do. So here we will have the property, plant, and basically what? Equipment. So we will start with the first asset within the trial balance. The first asset within the trial balance is property. So property comprises of land and buildings. So we will take the cost, which is 600,000. First of all, I will deduct. Remember, we say that to compute the net book value of an asset at the end, you take its cost at the start minus the accumulated depreciation, which is in the trial balance. The accumulated depreciation in the trial balance, this is the accumulated depreciation at the start. And because you are not interested with the net book value at the start, to this also we have to less the depreciation for the current year. The depreciation for the current year is what we computed in working two. In working what? To depreciation for the current what? Year. Yes. So to this, we will less the accumulated depreciation at the start. Remember, this is a property which comprises of land and buildings. The accumulated depreciation at the start in the trial balance is 80. And then we also less the depreciation for the current year, which is this one, 10,000. That is basically for property. That is for what? For property. Then to this, I will add the net book value for plant. And for plant, in this case, we must recall that there was a plant which was disposed. So therefore, in terms of how we are going to compute the net book value for the plant, that one will be quite different. That one will be quite different because this plant which was disposed, do we need to include it here? Who can tell us? The plant which was disposed, should it be included here? Helen, Zipporah, should we include it here? The plant which was disposed, yes or no? Do we include it here? Once an asset is sold, do we include that asset here? Yes or no? Automatically no. So therefore, in terms of how we are going to compute the net book value for plant is quite different. So what we will do, we had computation, that computation here. This amount here, this was the net book value for the plant at the start. But in this case, we proceeded and we deducted the net book value of the plant which was disposed. And in that case, after taking this minus this, I can remember we had a figure of 145,000. So this 145,000 is the net book value of the plant at the start of the year. And that does not include the net book value of the plant which was disposed. So therefore, to compute the net book value of the plant at the end, I will take 145. This is the net book value of the plant at the start, excluding the plant which was disposed. And then because this is the net book value at the start, this amount of 145, I will have to less the depreciation for the current year only. The depreciation for the current year only for plant is how much? Is 14,500. So to this, I will less 14,500. So remember this now for plant. This for plant. This for plant. You can see the computation for that is quite different because of the plant which was disposed. Then let's move and compute the net book value for the other asset, which is motor vehicles. So to this, we will add motor vehicles. We need to compute the net book value for motor vehicles. The computation will be the same here. We take the cost of motor vehicles at the start, 70,000, minus the accumulated depreciation at the start, which is given in the trial balance, 42,000, minus the depreciation for the current year, this one, 14,000. So this is how we compute the net book value for motor vehicles at the end. So to this, we add the net book value for office equipment. For office equipment, I'll do the same. I'll take the cost, which is 40,000. I will less the accumulated depreciation at the start in the trial balance, 15,000. I will also less the depreciation for the current year, which is 5,000. Which is 5,000. So this now will give us the net book value for the plant, for the office equipment at the end. And then I'll get the final figure, which will be the net book value for all tangible and current assets. So that will give us what? Maybe we can start with the property. So this 600,000 minus 90. 600,000 minus 90,000. And basically that should give us what? That should give us 510. What about plant? We take 145 minus 14.5, which will give us 130.5. What about motor vehicles? Motor vehicles, we have 70 minus 40 minus 14. I'm getting 16. And then office equipment, I have 40 minus 20. 40 minus 20, which will give us 20. So we add all these net book values. 510 plus 130.5 plus 16 plus 20. And this is the final figure I'm getting, 676,500. So confirm whether that is what you're getting. Confirm whether that is the figure you are getting. Are you getting that figure there? Are you getting that figure? That is confirmed by Helen. Okay. That is the total net book value for all property, plant and equipment, for all tangible and current assets. Then from there, we need to check, do we have any other non-current assets, things like investment, things like goodwill, things like investment property? I don't think we have any. I don't think we have any. So from there, let's proceed and record the current assets. We proceed and we record the current assets. So for the current asset, we need the trial balance. We check the asset on the debit column. So we have dealt with all those items which are up there. Then downstairs, you can see we have inventory at the start. Remember, you said what we record here is the closing inventory, the inventory at the end. Then below that, we have purchases, distribution, admin. In fact, we have dealt with all those items. But downstairs, you can see we have the trade receivables. The trade receivables amount is 74.5. So someone may ask, which amount is receivables, which amount is payables? So it is obvious that receivables, trade receivables is an asset. All assets have a debit balance. Trade payable is a liability. It should be the one on the credit side. So, but not to this amount of receivables. Remember, we said that there is this amount of 12 million, which we said should be deducted here. So from to this, we less 12 million. That will give us 62, 5 what? 62,500. Okay, so then below receivables, we have bank balance. It is also important for you to see that that bank balance is on which side of the trial balance? The bank balance. The bank balance is on which side of the trial balance? The debit or the credit? The bank balance. The bank balance is on the credit side. Being on the credit side, this is what? This is a bank overdraft. So being a bank overdraft, it will be a current liability. So then from there, we have deferred tax, current tax, bank interest, ordinary share premium, retained, interim, suspense. And then in the additional information, I think you have dealt with additional information number 1, 2, 3, 4. But if you go to the additional information number 5, we have the closing inventory. Closing inventory, we recognize it here as a current asset. And that is an amount of 85 million. Yes, note number 6 is about right issue. So meaning that we don't have any other assets. So we get the total assets, the total assets. So we add whatever you have here to the current assets. So, and in this case, I'm getting a figure of 824,000. 824. Confirm whether that is what you're getting. Yes, that is confirmed by Helen. I've not gotten any answer from Raphael. Raphael, are we together? Virginia, are we together? Rusia, tuko pamoja? Yes, so once you get your answer, type it in the chat box so that I know whether we are together or not. Okay, so we move and now record items of equity. And for items of equity, remember, we have these figures here. So where do we get these figures? From this statement of changes in equity. So the first item is ordinary share capital. Ordinary share capital. So the ordinary share capital, this is now what we bring here to 40,000. So then from there we have share premium. Share premium, which is 70,000. share premium 70,000. And then from there, we have the retained profit. We have the retained profit. So the retained profit is 346,300. And then we get the total equity. The total equity, which is 656,300. 656,300. Yes. So that's basically what we have as our total equity. So we need to move. And basically record now the liabilities. So for the liabilities, we start with the non-current liabilities. Non-current liabilities. Non-current liabilities.